A couple of days ago, when the detailed filings on this M&A drama came out, the opening scene was honestly pretty gripping. One Thursday afternoon, Paramount chief David Ellison suddenly felt something was off. The deal of the century that had seemed on the verge of closing now felt like it was slipping through his fingers. So he made one last push and sent Warner Bros. Discovery boss David Zaslav a very personal text message. The gist of it was, "I know you're absolutely slammed today, so I won't take up your time. Despite all the noise over the past 24 hours, I have nothing but respect and admiration for you and your company. If I have the privilege to work together and co-steward these iconic assets, it would be the honor of my life. When that day comes, you'll see that my father and I are still the same two people you had dinner with back then." You can feel that this isn't some cold boilerplate negotiation language. He is clearly trying to pull the relationship back to the level of we're people who've shared a dinner table, not just deal counterparts. But the problem was, just a few hours before he hit send, WBD's board had already met, coffee in hand, and voted unanimously to sell off its crown jewels, its streaming and studio assets, including Warner Bros. Film Studio and HBO, in a package to Netflix. By early Friday morning, that decision landed like a bomb across the entertainment industry. On one hand, everyone was stunned that WBD had actually chosen Netflix, effectively slamming the door on Paramount. On the other hand, it became clear that David Ellison could no longer rely on the soft sell emotional approach. He had no choice but to pull his closest partners and advisors into a room and start preparing one of the most aggressive, hostile takeover bids Hollywood has ever seen. And so, within just a few weeks, the fate of a storied Hollywood studio was rewritten at a breathless, almost brutal pace. What finally emerged in public view was the disclosure filed with regulators. Paramount had launched a hostile takeover offer for WBD with a total value of $108 billion. Naturally, the first question many people asked was, how does a company like Paramount, with a market cap of only around $12 billion, suddenly find the nerve to open with a bid to swallow a much larger WBD whole? The key, of course, is where the money comes from and how the capital stack is put together. According to the filings, the equity portion of the deal totals $41 billion. Of that, the Ellison father and son team would put up $12 billion of their own money. Around $24 billion would come from several Middle Eastern sovereign wealth funds, with the remainder from U.S. investors Redbird and Affinity Partners, the latter being the investment firm run by Donald Trump's son-in-law, Jared Kushner. On the debt side, Bank of America, Citigroup, and Apollo committed to $54 billion in financing. In other words, while it looks on the surface like a rich kid with an Oracle co-founder dad making a move, the real scaffolding behind this massive acquisition is a mosaic of capital spanning regions and investor types. From Paramount's perspective, this is leveraging other people's balance sheets in a smart way. But for WBD, it immediately raises a different set of questions. With so much non-U.S. capital, such a complex funding structure and core U.S. content assets, studios, and channel licenses at stake, the hurdle is not just shareholder approval. There is also regulatory review and national security scrutiny to get through, especially CFIUS, the body that examines foreign investment for security risks. Throughout negotiations, WBD repeatedly put this front and center, even explicitly raising a 15% foreign ownership threshold. They were signaling that this isn't just about price. From day one, they were weighing a more fundamental question. With a transaction this structurally complex and with this level of foreign capital, is there any real confidence it can actually close? Paramount, for its part, felt like it was being led around and played with psychologically. You want us to take out Tencent from the deal? Fine, we'll take Tencent out. You think Gulf money is sensitive? We'll figure out a way to strip those investors of governance rights. You say cash is king? We'll rework the structure into an all-cash offer. But no matter what was changed, the other side always seemed to find a new objection, until eventually they just stopped responding altogether. Internally, someone at Paramount used a very harsh word to describe the experience. They said Paramount had been gaslit from beginning to end. In other words, no matter how they adjusted, the other side always made them feel that they still weren't good enough, without ever making the real bottom line explicit. So how did this tug of war escalate step by step into what we see today? The timeline is actually quite clear. On September 14th, shortly after David Ellison had formally acquired Paramount through Skydance and brought it under his control, he came to David Zaslav with the first official offer. He personally delivered the opening bid, $19 a share, to Zaslav's home in Beverly Hills. That house used to belong to legendary Paramount boss Robert Evans and comes with a whole trove of stories of its own. Very soon after, Larry Ellison himself took the field. He sat down with Zaslav and WBD's honorary chairman, veteran dealmaker John Malone, to seriously discuss this potential transaction that could redraw the Hollywood map. In fact, for the previous 2 years, executives and advisors from Paramount and WBD had already been having on and off conversations about various possible combinations, but nothing had moved beyond the exploratory stage. What truly made things get real was the Ellison family stepping in to take over Paramount. For the first time, there was a buyer both willing and able to push substantial chips into the center of the table. Earlier, more conservative offers were quickly turned down, and at one point, WBD's board was seriously studying a plan to split the company into two parts and sell them separately. But it was precisely Paramount's repeated rounds of higher bids that sparked a new thought in Zaslav's mind. If someone is willing to pay this much, why not open the door and invite other rivals, like Netflix and Comcast, to bid as well? So on Paramount's side, you see the numbers moving up from $22 to $23.50 a share, along with a very sweet management proposal. Zaslav would be offered the role of co-CEO and co-chairman of the merged company. Meanwhile, Netflix, sensing opportunity, entered with its own acquisition proposal. Comcast soon followed. WBD's board decided to run this round as an accelerated process, aiming to pick a winner before Christmas. At that point, price was no longer the only variable. Who can sign the fastest? Who is most likely to clear regulatory review? Who can actually get a deal done under the specified terms? These became the hidden scorecard. So what else could the Ellisons do in that context? Their answer was to rework the financing on one hand and keep playing the relationship card on the other. On November 17th, David Ellison invited Zaslav to lunch again, trying to sell the vision one more time. If Paramount and WBD could combine, they could build a media company truly capable of standing up to the streaming giants and even the big tech platforms, one with IP, distribution, and scale. To borrow a cliche, they could better compete with the streaming giants and big tech. A few days later, the offer went up from $23.50 a share to $25.50. The following week, the Ellison family had dinner with Zaslav. Not long after that, in early December, they came back with a $26.50 all-cash bid. By then, the funding sources were almost fully transparent. The Ellison family committed around $11.8 billion. The three Gulf sovereign funds roughly double that amount, plus $1 billion from Tencent, and capital from Redbird Capital Partners and Kushner's Affinity Partners. From Paramount's own vantage point, they had indeed scraped together every dollar they could. But the story was far from over. On December 3rd, Zaslav called David Ellison and directly raised his concerns about the equity financing structure. WBD's advisors were equally blunt with Paramount's advisor Centerview, saying, "Cash is king." At the same time, the board was growing increasingly uneasy about Tencent's participation and the political sensitivity of Middle Eastern sovereign money. From WBD's standpoint, they had to think about whether CFIUS would pounce on a deal like this and whether it might be seen as handing partial influence over a major platform for U.S. cultural products and public opinion to capital linked directly or indirectly to foreign governments. Paramount kept explaining over and over that there was no so-called control issue here. The Saudi, Abu Dhabi, and UAE sovereign funds, as well as Kushner's vehicle, had all agreed to give up any governance rights and would purely be financial investors. All foreign ownership stakes, they stressed, would remain under sensitive thresholds. Internally, some at Paramount even said that those discussions around the 15% foreign ownership rule were never seen as a real obstacle, but more like a negotiation talking point. In any case, on December 4th, Paramount decided to go all in. They completely removed Tencent from the structure and tabled what they believed was a knockout offer, $30 a share, all cash, fully backstopped by the Ellison family and Redbird, with both debt and equity fully committed and ready for immediate signing. That day, David Ellison sent another message to Zaslav saying, in essence, I just tried giving you a call to discuss our new proposal. I've listened carefully to the concerns you raised, and I've tried to address them one by one in this new structure. From Paramount's perspective, by that point, they had changed everything they possibly could. Tencent was gone. The Gulf funds stayed, but had their governance rights stripped. Ellison had increased his own exposure, and all the debt was locked in. What happened next, though, made people at Paramount even angrier. According to the documents they filed with the SEC, WBD's board on this critical day of December 4th made no attempt whatsoever to further engage with Paramount or its representatives. No calls, no replies, no checking in with the advisors on the other side. Just a closed-door board meeting. That same day, Paramount's veteran banker, Centerview partner Blair Efron, sent a message to his longtime friend and counterpart at Evercore, Roger Altman. The gist was, I know you're absolutely buried. If you can't call back, I just want you to know 3 things. 1, we are willing to offer you full certainty. 2, our cash consideration is very strong. 3, we can close the deal very quickly. And there's one more important point. Our proposal does not include the words best and final. Translated into plain language, don't assume we've hit it. We've hit our ceiling. If a rival comes back with a higher bid, we still have room to move. Tell your board not to rush to a final decision. But that night, New York Times, WBD's board met and chose Netflix's proposal. Later, people close to WBD told the media quite bluntly, for the board, the core priority this time was not who is paying the most, but who can sign right now, withstand scrutiny from regulators, and actually complete the transaction under the required terms. On these 3 points, Netflix's proposal looked clearly cleaner in their eyes. Simple capital structure, no sensitive foreign capital, predictable regulatory risk, and no need to fight a brutal, uncertain battle in front of CFIUS. So by this stage, the story had really shifted from who's more sincere to who's less hassle. Paramount saw itself as the passionate suitor, repeatedly raising its bid, repeatedly tweaking the structure, even leaning on private texts, lunches, and dinners in an attempt to use personal rapport to compensate for technical weaknesses in the financing. WBD's board, however, was steadily de-emphasizing price and recentering its perspective on executability. Would CFIUS balk? Would the level of foreign ownership become political fodder in Congress? Would Tencent's name trigger extra political risk? Would Middle Eastern sovereign funds be magnified by the media? In the end, their choice was ice cold. If Netflix is willing to pay roughly comparable consideration and spares us all of these regulatory landmines, why gamble on a structurally complex deal that relies so heavily on foreign capital? If you put yourself in a seat around that WBD boardroom table, you may find a rather brutal reality. In deals of this size and sensitivity, no matter how compelling the story and vision may be, they all eventually have to yield to one word: certainty. Of course, the show is not over. After being shut out, Paramount didn't concede defeat. Instead, it flipped the page to hostile takeover. Now it is bypassing WBD's management and board and taking its case directly to shareholders. We are offering a higher price, our cash is real, and we can give you a better exit. The battlefield from here on out will likely shift away from private texts and quiet dinners toward a very public shareholder fight. Proxy solicitations, roadshows led by banks, and thick stacks of voting materials. David Ellison put it quite dramatically on CNBC, "We're really here to finish what we started. We put the company in play." In plain English, since we're the ones who pushed this company onto the table, we're not walking away easily. Whether Netflix ends up taking the prize, Paramount manages to pull off a hostile takeover upset, or both are eventually worn down by regulators and shareholders so that no one gets a clean win. No one can say for sure right now. But one thing is certain. Next time you see a similar M&A soap opera, don't just focus on who sent whom an emotional text or who had dinner with whom and where. What you really should be looking at are those few pages almost no one wants to read: the financing structure, the proportion of foreign capital, and the regulatory provisions. That's where life or death outcomes usually hide, inside the most boring details.